You know, in the world of finance, some moves aren't just news, they're signals. And a massive one just went off. Warren Buffett's potential successor, a guy named Todd Combs, just did something that has everybody talking. So let's dig in and figure out what this really means for the future of investing. I mean, that's the million-dollar question, isn't it? Combs is leaving Berkshire Hathaway, literally the fortress of finance, the safest of safe places, for JPMorgan Chase. Now, this isn't just some guy changing jobs. This is a seismic shift, and the reason why is basically a masterclass in how investing is changing right before our eyes. It tells us the future of value might not be where we've always looked for it. And get this, the stakes are huge. We're talking $10 billion. Combs isn't just getting a new office. He's been handed the keys to JP Morgan's brand new strategic investment group. And this isn't play money for buying a bunch of index funds. No, this is for making huge direct bets on critical high-tech companies. The whole thing makes perfect sense when you look at it through the lens of 3 classic Buffett lessons that Combs has absolutely perfected. Okay, let's kick things off with lesson number 1. This is the foundation of everything, the absolute core of the Buffett philosophy, the idea of an economic moat. So the economic moat. This is the simple idea that made Buffett a legend. It's just a powerful, lasting advantage that a company has that shields it from competitors. It's like a castle moat, right? It lets them rake in profits for years and years. Think of Coca-Cola's brand. You just can't replicate it. Or GEICO's low-cost insurance model. Combs mastered this at Berkshire, but now he's taking it to a whole new battlefield. Now here's where it gets really interesting. The whole idea of a moat is getting a 21st century upgrade. This new $10 billion fund isn't buying railroads. It's targeting sectors like defense, aerospace, and energy. And these industries have incredibly deep moats, but they're modern moats. We're talking about things like ironclad government contracts, essential patents that no one else can touch, and regulations so complex they create these sky-high barriers to entry. Combs is taking a timeless idea and pointing it straight at the most defensible, tech-driven businesses of the future. And listen, this applies directly to you and me. The most important moat you can ever build isn't in your stock portfolio, it's in your own career. So ask yourself, what is your unique, durable skill? In a world of AI and side hustles popping up everywhere, your personal moat, that specialized knowledge you have, that unique thing you can do, that's what's going to protect your ability to earn long term. All right, let's move on to lesson 2. And this one kind of flips the script on the most common piece of investment advice you've ever heard. Buffett himself said it best. Diversification is protection against ignorance. Now that sounds harsh, but what he meant was that while spreading your money out is smart if you haven't done the homework, real, life-changing wealth, that's usually built by doing the exact opposite. It's built by concentrating your money in a small number of incredible businesses that you understand inside and out. So let's look at the 2 approaches, side by side. On one hand, you've got broad diversification. You buy an ETF, you own hundreds of stocks. It's a great strategy if you don't have the time to do deep research. But on the other hand, you have what Combs is about to do, high conviction investing. This means owning maybe just 10 to 15 great companies that you know like the back of your hand. Yeah, it takes a ton of patience and real understanding, but the potential payoff is on a whole different level. So how do you know if you have that deep understanding? Well, here's a simple tool. It's called the sleep test. If one of your biggest investments drops 20% and you're lying awake at night panicking, it's a sign. It means you either own too much of it, or more likely, you don't truly understand the business you invested in. Because someone with real conviction sees a 20% drop not as a disaster, but as a sale. It's a buying opportunity. And that brings us to the third and maybe the most powerful lesson of them all. This is the engine that drives everything else. The simple, boring discipline of constant learning. It's almost a legend at this point, but it's true. Warren Buffett reads about 500 pages every single day. And when Todd Combs joined Berkshire, he adopted the exact same habit. Their greatest advantage isn't some secret algorithm. It's a massive, ever-expanding base of knowledge that they've built day after day through just relentless reading. Seriously, think of it just like your retirement account. The money you put in your 401k compounds over decades, right? A little bit turns into a lot. Well, knowledge works the exact same way. Every annual report you read, every book, every deep dive, it all connects to everything else you know, and over time, it compounds into this incredible intellectual advantage that is just impossible for someone else to copy overnight. So how do you actually start building this? It is so much simpler than you think. Just dedicate 1 hour a day, 60 minutes. Not to scrolling social media, but to deep reading. Dive into a company's 10K filings. Read industry white papers. Watch tutorials on new software. That is how you build your own knowledge moat, one page at a time. So when you put these three lessons together, the modern moat, concentrated conviction, and compounding knowledge, what you start to see is a completely new blueprint for investing. What the Todd Combs move really signals for the future is this: the deepest value and the strongest moats are now being built inside the world of technology. The whole playbook is evolving right in front of us. The old way of just passively buying broad market ETFs is being challenged by a new approach. We're moving from purely passive investing to making active, high-conviction bets. And it's no longer a choice between value or growth. The new playbook is about finding value in frontier technology. It's about making decisions driven by deep knowledge, not just by following the herd. So where is that deep knowledge pointing? Right here. These are the sectors to watch. This is where Combs and JPMorgan's $10 billion are likely headed. AI, transforming healthcare, cybersecurity, the next generation of energy, and advanced manufacturing. These are the industries where those powerful modern moats are being dug right now. This is the signal. This is where you should be doing your homework. So at the end of the day, this big move by Todd Combs is a clear sign that the world of deep value investing and the world of frontier technology are finally merging. And that leaves all of us with one really critical question. It's not about what stock to buy tomorrow. It's about how you prepare yourself for this new world. So what is the single most valuable page you can read right now, today, to start building your own unstoppable moat?